We are yet to see the full impact of coronavirus on the housing and rental market. New data reveals how conversations about the property market have changed in the past 6 months, and it's not all bad news. Nerida Conisbee, Chief Economist at REA Group, joins me now. Nerida, tough times, not only for people renting, but landlords as well, where perhaps tenants are struggling with payments. How has the pandemic been affecting properties that have been negatively geared?
Yeah, look, it is interesting. Property investors have largely left the market for now. You know, we can see that inquiry levels are well down in pretty much every city. The big problem is that we do have these really big issues in the rental market. So we have seen this rapid increase in rental listings. Rental levels are falling. At the moment, it is highly concentrated. The risk is highly concentrated in many development areas, but we don't know longer term how it will play out. So for now, investor activity does remain very low.
And you've also spoken a lot about regional properties in Australia with some positive trends. How strong are regional areas?
Yeah, look, it's interesting now. We are starting to get some pricing information at a local government area over the past quarter. So we are starting to see what COVID has done to house prices. So overwhelmingly, we haven't seen the big falls that many people expected in house prices. It has been quite interesting, I guess, given that we are in the middle of a pandemic and in the middle of a recession. But what is particularly interesting is how much regional areas have increased in price. And we were seeing that for quite some time on realestate.com.au. We were seeing elevated levels of search in places like Byron Bay and Ballina. But now it is flowing through to pricing. So when we have a look at the areas seeing the strongest price growth, it is including places in premium markets of Sydney, so that trend is holding true. But a lot of regional areas are also seeing particularly strong price growth over the quarter.
Yeah, it is interesting, isn't it? And do you think it's likely to rise even higher in the next quarter?
Look, it will depend what happens with the pandemic. You know, if we all start returning to the office and people can't work wherever they want, I think that will make a bit of a difference to what the outlook is. For now, though, we are continuing to see that northern New South Wales area in particular doing well. The other trend, though, is how much mining growth is impacting pricing. So we were seeing very, very strong price growth in places like Karratha. You can see Whyalla on the list. You know, Whyalla is certainly not an area that generally sees strong price growth, but it is a big steel port. So it does seem to be doing quite well, likely off the back of increasing employment growth.
Yeah, it is, as you said, incredible to watch. And how would the lowest interest rates be affecting this? I mean, because it's great news for some, but it's not so good for people like self-funded retirees, for example.
Yeah, look, I mean, this is the thing with housing at the moment, that low interest rates is really helping people pay off loans and get loans, or, being able to afford to get certain levels of loans. So it is propping up the housing market. The other thing that is propping up the housing market is the fact that banks are being very accommodating in the way that they handle mortgage holders. So any withdrawal of that support could have a big impact on pricing. As you said, though, low interest rates don't make everyone happy. If you are a self-funded retiree, it can be quite challenging. But if you are invested in shares at the moment, the share market had its strongest August since 1986, so last month. So it is quite incredible what's happening at the moment. It's certainly not a normal recession that we're seeing.
Keeping you busy in your work.
Yeah.
And finally,
sorry, what was that?
Just saying, keeping you busy in your field of work.
Yeah, totally,
never a dull moment. And during,
right.
You've got some fascinating stats as well. During lockdown, we saw greenhouse gas emissions fall. What were the levels, and do you think it was temporary?
Yeah, look, it was interesting. The data that came out from the federal government in June did show a very marked reduction in greenhouse gas emissions in June. So it was consistent with what we're seeing globally. There was very little car use during lockdowns around the world. And also, obviously, no one was flying. There was very little air travel that was taking place. So both of those had a very, very big impact on the levels of greenhouse gas emissions around the world. What is interesting, though, is in cities that have come out of lockdown, we have seen a very big increase in these emissions post-lockdown. And the big issue is that people are driving more. So what's happening is people are very nervous about getting on public transport. Car use is accelerating, and in some cities we are now seeing greenhouse gas emissions above levels that we were seeing pre-COVID. So it is an interesting trend, and interesting how things are playing out across all aspects of society, you know, not just the economy, not just the share market, housing, but also from an environmental perspective.
Yeah, so much to talk about, and very interesting times indeed. Nerida Conisbee, see you next week, Chief Economist at REA Group.
Thanks. See you then.